Okay, folks, welcome. This is Patrick Zielbauer from Infinity Futures. It's Monday, December 10th, 3:26 p.m. Welcome, everybody. Thanks for coming to the event today. My name is Patrick Zielbauer. I will go through some risk stuff first, and then we will go ahead and jump right into it, take some questions, and get started. All right. So first, all right, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is trading suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations may be subject to change at any time. Past performance is not indicative of future results. So, folks, this is extremely important, especially in this environment. Only fund a futures account with risk capital. Okay, that means money you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle and so forth. Be very conscious, especially in this environment, with the use of day trade margin. You know, we have a lot of flexibility here at Infinity with respect to margin. We get lots of questions about it. But the fact remains that even if you use the full overnight margin per contract, which is an example in the NASDAQ right now is, I think, correct me if I'm wrong, but in the neighborhood of $7,700 per contract, okay, you're still using a lot of leverage, even if you trade with that much per one contract that you trade. All right, so that's something to remember. If you are unsure about what full contract value means, or you need an explanation of what the leverage means or how it affects the account, make sure you come to us and talk to us about that before you start trading, because that's something we can outline very objectively, and we will always talk objectively when it comes to risk. We believe that the more educated you are with respect to your understanding of leverage and the more you respect it, the better off you'll be in the long run. So something to think about. All right. Okay, so this presentation is going to be focused on a couple of different ways of looking at the market in terms of profile, both in terms of time and in terms of volume. So we're going to talk about the differences. I'm going to show some examples. Our session is going to have to be a little bit abbreviated today, so I'm going to try to get in as much as we can. But we do want to take a lot of questions, and I also want to mention that the files that we're going to use today are available to anybody who's got a demo or a live account with Infinity. So if you are a customer of ours already, okay, or if you're using our demo and you just want to have a copy of these files to kick around and maybe you want to watch the recording later or something like that, please feel free to request them. You could just email me or your representative in the office. We'll have them over to you right away. We'll show you instructions on how to import them, and they're yours, okay? We've been doing these events for a long time. We've always given away the chart files for free anytime people ask, as long as they're either a demo or a live account holder of ours. Okay, so please feel free to leverage that. We want you to learn how to use the program properly. The fact is, Sierra is an awesome program. It's also a very big and open-ended program, and a lot of the ways that I learned this program was through getting files from other people and then watching the recording in conjunction with my possession of the software. All right, that's how I learned a lot, in addition to Sierra's documentation, which is also extremely thorough. All right, so if you have questions along the way, let us know, and this is going to be a very customer-driven event. So if you have lots of questions, please feel free to ask, and whatever we can answer, great. If there's something I have to research and come back to you, that's fine too. All right. Okay, cool. So again, thanks everybody for coming. There were a couple of questions because I know there's some newer people in here. The way that it works with Sierra, for those of you who are wondering, is we offer Sierra for free for clients of Infinity who do 10-round turns every 30 days. Okay, so if you buy one E-mini S&P and sell one E-mini S&P 10 times in a 30-day period, then we would waive the fee that we would otherwise charge. Okay, that's $19.95. So it's still cheaper than going to Sierra directly. Plus, we think our support is very, very good because we answer the phone and emails, and we're used to dealing with clients in that respect. But if you do a little bit of trading every 30 days, you don't have to pay for the charts on top of that, right? So 10-round turns means like 1 buy, 1 sell 10 times, or maybe if you're trading 2 lots, it could be 2 lot buy, 2 lot sell 5 times. Okay, however you do the total of 10, we then waive the fee for the charting. Okay, so it's a pretty good setup, even if you're not active, because $20 is still cheaper than what Sierra charges directly for this version of the program. All right. Okay, Sam's question relates to the charting club, something I did not mention, but I should have. We are continuing to build out chartingclub.com. This is going to get bigger and better in the coming year. And we do have a mechanism coming, we believe, Sam, here, where you will be able to log in and get the chart files. They're not up there yet, but that is something that we're working towards. For those of you who are wondering, this is kind of like a sister website of ours, and a lot of our video content, our new stuff goes in here. So if you want to get notified when we do a new video about Sierra, someone in our office creates one, so maybe something new about Sierra comes out and we do a little video and blast it out to everybody, make sure you register here. It's free. It has nothing to do with your trading account. There's no personal data except your first name, last name, and email address. Please feel free to sign up. Okay, cool. Yeah, thanks for reminding me on that, Sam. All right, so I want to cover a couple things that are, basic instructional stuff, and then I want to cover a couple of things that are related to profile charting in the context of the market environment that we're seeing right now. Okay, so for those of you who've come to some of the last few events, you've probably heard me talk a lot about these other charting mechanisms or ways of looking at the market that incorporate ranges, daily ranges, rather than just traditional indicators or oscillators. Okay, we'll talk about why that's important here in a few minutes. But the first thing I want to show you is just purely what you would see if you were looking at Sierra for the first time and you were messing around with the profile stuff. Okay, so there's two ways to get a profile chart up in Sierra. Okay, one way is to do it with what's called the TPO profile study. Okay, TPO profile chart study rather. And that is what you see on the left. Okay, this is a market profile that is based on time. So what happens is each one of these blocks represents a 30-minute period, and the chart advances differently than a regular time-based chart. It creates this sort of, in a normal market, what we call a normal distribution, it creates this bell curve looking chart where you're seeing at which price the market spent the most time. So the pink or the magenta line here you see here, this is what is called the TPO point of control, and that is the price at which the market traded the longest. It's not necessarily the price at which the market traded the most. Okay, that's an important distinction. There's also some stuff you want to take into account with respect to session times, like am I looking at the full 23 hours? Am I looking at just the day session? We're going to cover some of that. But if you were to add the TPO profile study to like a naked chart and just hit apply without changing anything, this is what it would look like on the left. Okay, so what basically happens here is you've got this gray area representing the value area, which means 70% of the time the market was trading, it was trading in between these two price levels. Okay, value area high up here, value area low. Okay, you've got a midpoint, that's the orange thing, or the opening price rather, the orange thing. You've got the red price up here, this little arrow that represents the current price, so the last traded price, which you can see is still moving because the futures are reopening right now. You've got this blue thing, which represents the initial balance. That's basically, by default, the first hour's range. So you see this blue line here that represents the initial balance. And then you've got this green line up here that represents an extension, a numerical extension of that. Usually it's like 50% extension to the upside. And then the red line down here, the initial balance extension to the downside. Okay, these are all options in the chart that can be messed with, and everything is 100% customizable. Okay, so that's basically what the TPO profile chart does. It's designed to show you the areas at which the market was most interested in terms of time. The chart in the middle over here is called a volume by price study. All right, the volume by price study is different because its histogram is based on number of contracts that traded at a given price, not the number of minutes that the market spent at a given price. So if you want to be able to track profile and you also want to be able to use indicators that you're like your traditional indicators that are advancing based on time, you will probably want to use a volume by price study. All right, that's because the TPO profile chart that you see on the left, because the structure of this chart is so dramatically changed as a result of the way it's being displayed, you can't really add like moving averages and whatnot to this kind of a chart because it just doesn't make sense. All right, this chart is not advancing the same way you're used to. Okay, in the middle here, again, this is a volume profile chart. So the difference between what's on the left and what's on the right is that the one on the left is based on how much time the market spent at a certain price or a certain price range. And the one in the middle is the the amount of volume that traded at each price. And then you have the red and the green color, which represents bid or ask volume. So a candle that has lots and lots of red, that indicates that there was a large amount of selling on the bid, which is like someone hitting sell market, for example, would be a bid trade. So that's bearish, in its most simplest explanation. Whereas the green volume is volume on the ask, or ask volume, like someone hitting buy market, all right, meaning you're hitting the offer. Okay, that's an ask trade that would come through as something that shows up in the green. All right, normally when I look at the volume profile, I actually disable the setting that separates those colors because it's not actionable information to me, especially in this context. It all kind of looks like it's 50-50. What do you really make sense of that? I don't see anything when I look at that. So normally I will actually remove that setting. Okay. All right. Okay, and then the chart on the right is a TPO profile chart with a volume profile next to it. Okay, so if you, the volume by price study, which I will show you how to add in here in just a minute, is basically one of the only studies that can be effectively added to a TPO profile chart and still work. All right, if you add a moving average or MACD or something, it's not going to show up properly or even at all. All right, but this is one study that will actually sit on top of a market profile chart or a TPO profile chart. And the reason why people do this is usually because they want to look for consistency or disparity between where the market traded the most time and where it traded the most volume. So a lot of times you'll have situations where the value area, for example, of the profile chart matches or is close to the value area of the volume profile. Sometimes it won't happen that way. For example, if the market stays in a certain range like the whole day, and then at 2:30 in the afternoon it makes a new high and trades a crap load of volume in that last half hour, well, it spent very little time up there, but it traded a whole bunch. So the volume profile is going to look a lot different than the time-based profile. You follow? So looking for those disparities, that's something that traders that I speak with who are interested in this type of analysis are often looking for that sort of thing. Okay. Okay. Arthur is asking, based on what we're looking at today, Arthur's asking basically, the market is way up here right now, but it traded the most minutes down here. Effectively, yes, that's the case, Arthur. The market spent very little time in positive territory today, right? So this kind of makes sense. Market was pretty much down all day and rallied into the close. So you've got a market that's finishing what is called above value up here. All right, it spent most of its time, in this area. All right, and that is based on from 5 o'clock last night until now, which is when the session opened Sunday evening. Okay, so just to go through, some basics about how to actually get this up here, just for those of you who are really brand new. If you just go to File and go to New Chart Book, you kind of get this blank screen. You can click on the Find Symbol button up here, or you can go to File and select Find Symbol, which is right here, and you can just type in the symbol. In this case, I'll just use ESZ8, or you can locate it in the menu and push Open Intraday Chart. And when you hit it, you'll get a basic chart. More than likely, you'll get just a regular candlestick chart, depending on how your default settings are set. And the way to get to the section where you add the studies is by right-clicking and going to Studies. All right, and then you scroll down here until you look for the TPO profile study, TPO profile chart, which is right here, and add it and push OK. And this is what I mentioned earlier by if you just add it and make no changes and push Apply, the chart's going to reload instantly as a profile chart, which basically does away with all of the candlesticks. Okay. Now my chart only loads a few days by default because I try to keep the load times really quick. All right, that's why it's only showing us a few days here. That can easily be adjusted. Yours will load more than mine. I just have mine sort of like artificially low to keep the load times really quick. All right, and then also if you scroll down until you see volume by price, like this, volume by price, click Add and Apply, you're going to see the chart's going to reload now with the volume profile. So that function of opening a chart, right-click Studies, and then adding the TPO profile chart and the volume by price studies, that's how you get to this sort of endpoint. And that's basically what I was showing right here. Okay, so here's one chart that has just one of them. Here's one chart that has the other one, all right, the volume profile, and then here's one that has both. And then we just demonstrated now how to do that as well. Steve says, how many charts can you have open at a time? You really can have as many as you want, Steve. Sierra is a very lightweight piece of software. Most people who come, or many people rather, who come to Infinity come to us from equity trading platforms or option platforms that are way, way heavier and resource intensive than what our program is requiring. So you might be surprised how much you can do in this thing without putting, a lot of excess tax on your system. All right, it's a really lightweight program. You can have as many charts open as your system will allow. You'll probably know if things start to slow or hang up a little bit if you start having too much stuff. I did mention a moment ago the load times. If you right click and go to chart settings, there's a section right up here that says days to load. If you're looking at a really short term time period like 145 ticks or something, 233 ticks, where you don't need that much historical data, keep this number low. All right, if you're looking at a daily chart or a 480-minute chart or something like that, keep it high because you need a lot of historical data. But if you're looking at a really short-term period, then I just wouldn't advise loading too much data because why would you want to load, 180 days of 55 tick charts if you're only looking at today, right? It's just excess, data and stress on the system. So if you want to increase this number, which by the way defaults to 30, you can see mine was set to 7. I could just change this to 14, push apply, and it's going to load pretty quickly. This is a very basic regular computer. GoToWebinar is a really heavy application too. This is a little bit more tax than the machine normally is, and it still loads pretty quick. All right, so it's pretty fast. All right. Okay, so Arthur, I'm going to try to answer that question individually just because it's going to take us, down the rabbit hole. All right, I want to focus a little bit more on some of the functions here if you don't mind, but I will, let's talk about that directly. Okay, so why do people look at, volume profile in general? I'm going to show an example here that is basically something that I created with the help of someone else I know in the trading community who kind of gave me a basic template here, and I sort of edited it and messed with the colors a little bit. And this is what I meant by beautiful market profile charts. They'll make you tear up a little. Okay, they just look, when they're done right, they just look really, really clean, and there's not a lot of clutter, and that's just really enticing to me as someone who is looking at these charts all day. And a lot of times I'm trying to help my clients declutter their screen, and that's really the basis of us doing these events in the first place. So just it's kind of a joke, but that's really what we were going after, is we want nice, clean looking charts that don't have too much data, that only have the data that's on the chart that is required for us to make decent decisions. All right, that is, in my opinion, what the goal should be. All right, decision fatigue. Okay, we've been through this a million times. For those of you who come to these events a lot, it's real. In my opinion, it brings the worst out of traders faster than any occupation. Okay, if you put someone in front of a highly levered market with a fast platform and nobody looking over their shoulder saying, nope, 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 don't do that, okay, and a volatile environment, again, with a ton of leverage, well, what do you think is going to happen, And I think that one of the problems in our business is that people get wrapped up in tons and tons and tons of indicators, and it really affects the ability to make quality decisions as the day progresses. So I believe decision fatigue to be a real thing. I think that considerable effort should be put forth by any broker, salesperson, customer service person, or trader to try to reduce the amount of data on the screen to only what is necessary to make decisions. All right. And I think that when you encounter the environment we're in right now, this is especially important because mistakes can be very costly. They can be devastating potentially. All right. Okay. So when it comes to and again, this file will be made available to anybody who wants access to it. All right, we'll touch on that in just a second. All right. Now, there is often a question that comes up about, why do people look at the market this way, or how do they look at the market? All right. Why is it different than what I'm doing with my, MACD crossover? And what I have generally found is that people who trade with a market profile either as their main view, or they trade it as a large part of their decision making, they tend to be more patient people. Now, I'm not suggesting that people are becoming patient because they look at market profile. They might be inherently patient and therefore gravitate towards a strategy that requires patience. This is a chicken or the egg type question. What I will tell you is that I could take a customer of mine who has, let's say, $10,000 in the account and trades 150 contracts a day and overtrades the account, and put them in front of this chart. They would never want to use it because they can't click the mouse that often. So my interest in market profile is not necessarily because I find market profile particularly fascinating. There are many aspects of it, in my opinion, that are outdated. But if it is going to slow people down to the point where they might force themselves to exercise a little bit more patience or be a little bit more cognizant of larger time frames, then I don't really care what the strategy is. I'm in it to extend the life of the account. It's in both of our interests to do that. And what I have found is that because people who look at market profile traders, market profile charts tend to look at things on a little bit longer time frames, and they're looking at charts that build a very short distance from, let's say, from here to here for the entire day. Okay, the chart goes from here to here for the entire day. All right, based on 30-minute blocks, there are just not that many opportunities to trade as often. Okay, Chris asks, does it make you trade better? It doesn't make you trade better. Nothing will make you trade better unless you're not making the trading decisions and you've found something that can place trades on your behalf better than you. I don't necessarily think it can make you trade better, but what I think it will do is it will force you to wait for the market a lot more often than if you were looking at a 100 tick chart that has lines crossing over every 2 or 3 bars, and you're forced to ignore 200 signals a day. That's really hard to do. And if you are predisposed to trading in a way that makes you want to do that, then you probably have a disadvantage from the beginning. So that is the reason why I think this is interesting. One thing that's interesting about market profile is that you always hear people who are on the floor in the open outcry trading days, this is the only way we looked at the market. It was a lot harder to track volume back then. All right, technology just was not there. Trading volume was not as easily tracked. So time is an easy way to track where the market was from this moment to this moment. So market profile charting is a way for for people who did not have access to real-time, say, volume quotes, to be able to track the general area of where the market was based on volume, because they didn't have volume, but they could easily measure time, and that's kind of like the next best thing. The reason why the volume profile stuff is a little bit more interesting to me now is because now we have technology. It's so much easier to see real-time volume counts. So you can actually use volume profile in a similar way that people used to use market profile or time-based profile. Okay, so this is an example of a TPO profile chart that's got market profile on the left, very similar to what we saw, and then the volume profile on the right-hand side. One thing that I would want to warn everybody on is that if you add the profile chart to your screen, you will see that there are a ton of inputs. Okay, there are a ton of inputs. This is one of the most flexible studies that exists within Sierra. It doesn't make it better. It just means that Sierra has taken a lot of input from people and given people a ton of choices. What I'm going to do in a minute is show you at least how you can build a chart that takes you a little bit closer to what you see in the background here from what we saw with the original one like this. Okay, so we'll get to that in just a second. But I want to mention something else here about some of these these levels and the things that people are constantly asking about. And this also ties into what we were just talking about patience. All right, so this chart that you see here is identical, except for the volume profile on the right-hand side of each chart has a slightly different characteristic. Okay, and that is that the volume profile on the right has this color-coded feature where you're basically seeing how much volume was traded at a specific price relative to the point of control, which is this maroon line right here. So this line right here represents the price at which the majority of the volume has traded. And when you see a line that's got a lot of blue, that means it's approaching, possibly overtaking the point of control. And then where there's not a lot of volume, it's more red, and then it's like orange, yellow, green, and blue, and then the maroon is the point of control. The chart on the left doesn't have that. That is a personal preference. This thing on the right here basically was built, I think, because there was a competing program that someone wrote that did something kind of like this, and people found it really intriguing, and the colors look nice, and I think people asked Sierra to make it. So I just wanted to show that is available, because there are people who still ask for that from time to time. But this is a volume profile, not a time-based profile. So in the 80s, when or whatever, when they're on the floor, they did not have the same type of real-time volume statistics that you're seeing that we have today. So now we can track very closely where the actual volume was traded at each price. It's very easy for regular traders who are at home to see price levels at which the market was very interested in. And so a lot of times when people are looking at volume profile, they're looking for these areas of very low volume or very high volume. They call them low volume or high volume nodes. Okay, and you can actually make lines that will extend them out so you can see. But a lot of times what you see is when the market is near these low volume areas, that's when the market is like ripping through a price level. And a lot of times you see that it'll rip right back through the same price level. We kind of saw that today here where the market is falling lower, okay, like it was earlier this morning. This is an area here where there was just not much buying or selling happening. And when the market rallied back through that same price level, it cut through it like butter, right? There's almost no pause here. All right, this is a 15-minute chart, so I don't know what was happening on like the 1 minute time frame at this time. But a lot of times when people are looking at a volume profile, they're looking for these areas of very little interest because they're looking for those areas to get blown through. So that is a way that someone who is not into volume profile could immediately take a volume profile and incorporate it into something actionable you could try to use tomorrow. Right? It's very easy to set up the volume profile study, and it's very easy to see areas at which very little activity took place. Right? The technology makes it so easy for us to track volume. It's just a histogram. All right. Now, going back to what I mentioned a moment ago about the patience, thing. One thing I have noticed, and I may have missed a few, maybe there's a couple people here who could enlighten me, but a lot of times when people are looking at volume profile or market profile, they're looking for levels. They're looking for the market to wait. They're waiting for the market to approach a certain level. So what I did was I added a bunch of these levels that I'm commonly asked about, and then I put labels on them so we can easily see them here along the y-axis. So I'm going to go through them very briefly, and then if anybody thinks that there's something that I don't have on here that they would want to be able to see, then let me know and I'll add it to the template, and then I'll make sure to send it out to everybody. So up here, you've got the high of the day, okay? This black line right here, it's kind of hard to see because it's behind another one, but this is the value area high. Okay, that's the volume value area high. All right, and then this here is the overnight high. So the overnight high I would define as from the market opening in the evening until 8:29 and 59 seconds Chicago time. So everything up until right when the market opened up. All right, this is the current price. All right, this is the first 5 high. So this is like the first 5 minutes of the open. I created a first 5 high and a first 5 low. Okay, so we had a big range. I mean, look at this 5-point range, or this 11-point range basically in the first 5 minutes of the session. And that session, as it stands here, is from 8:30 to 8:35 Central Time. So that's like when the New York stock market opens. So you've got a quick, sort of opening range area. All right. Then you've got that initial balance midpoint. Okay, so the initial balance high is the initial balance itself, I think, is behind one of these other lines here. This is the initial balance high extension. So the initial balance, remember, is the first hour. Okay, so the midpoint is the middle of that. All right, then you've got the previous day's low. You've got the volume point of control. So this is the price at which the majority of the volume is traded. You've got the VWAP, or the volume weighted average price, the overnight low, the initial balance low. Okay, again, that's the first hour low. And then you've got an extension off that. So this is just a numerical calculation. I think 50% of the initial balance extended off to the bottom. Okay, a lot of times people will use, and I'm going to talk about that in a second because it's extremely relevant. And then the low. All right, so when you're looking at these sorts of levels, a lot of times what happens is you see the market get to these levels and everyone else is watching the same levels. It's kind of like when you look at some daily chart and you see this very obvious 61.8, Fibonacci retracement. And it's like, well, everybody else is looking at the exact same level. It's so obvious. Is it self-fulfilling or who knows? But it's other people, other traders or computers or whatever are watching that level, and you see this flurry of activity. And so what I think a lot of volume profile or TPO profile traders do is they just wait around a lot. They wait for the market to reach these sorts of levels before they start to act instead of acting first. And I think that might be what make them potentially more successful. All right, doesn't necessarily mean they are. All right, I don't have empirical data to back this up, but what I do see are people who look at things in this way, they tend to trade way less. And they tend to trade, with a wider stop and less times per day, which you might think is counterintuitive for me to encourage people to do that because Infinity is a commission-based firm. But of course, we're talking longevity. All right, that's also in our interest. So a lot of people are puzzled by the fact that we spend so much time telling people to trade, fewer times per day. There's a good reason for it. All right, the initial balance, Arthur, is going to be the first, usually what people will refer to it as the first hour of the day. So the first hour, first 60 minutes of the New York stock market session. So for you in East Coast, it would be 9:30 to 10:30. All right. Now, this is going to touch on something else I'm going to show as well here in a little bit. But sometimes people ask, like, what's with the extensions? Okay, what's with this IB high extension and this IB low extension? All right, and this directly correlates to this thing we talked about over the last couple of weeks, which was this theory of using, this maximum permissible deviation sort of level as a way to look at the market. All right, so what this is, everybody, and I know this is not directly related to profile, but I'm going to show another chart book where it incorporates some of this. And I'm not going to go through all the math here because this is already recorded and up on YouTube, but we started talking about this thing called the maximum permissible deviation recently because the markets have been so volatile that regular indicators are just getting ripped through. I mean, it's like they're not even there. And that happens a lot, but it happens a lot more when the Dow has like an 800-point range, right? I mean, there's no meaning to anything. And I think that in that sort of environment, what traders should do is start looking at studies that incorporate the current volatility. Instead of looking at like a moving average that looks at the last 20 days, it doesn't matter about the last 20 days if, Brexit is in the picture or if Apple is getting banned from China or whatever. Those things become far more relevant to the indicators become very much less relevant than the current news announcement that is driving what we're seeing on a day-to-day basis. And so what this study does is it takes the volume weighted average price, which is this black line, and it adds half of the current range to it. And by the current range, I mean the days range from the high to the low. So if you were to take the high minus the low, that gives you the range, divide that number by 2 and add it to this black line, that's this blue line up here. That's so what will be considered the maximum permissible deviation. And then if you were to take that same range, divide it by 2 and subtract it from the black line, then you get this area down here. Okay, that's the maximum permissible deviation to the downside. So what it basically is doing is it's creating this kind of like Bollinger Band, like standard deviation type thing that is directly related to the volatility today. And by today, I mean in the session that began at 5 p.m. last night. So there have been lots of situations that I have seen potentially good trade opportunities that are directly related to these values. Today is a great example of one. I mean, in almost all the indexes. And what I did was I also created a kind of a halfway point. So for those people who are maybe a little bit better capitalized or a little gutsier, for example, they could use this as a place to counter trend, trade the market, a little early. If you don't want to be as patient. So this is called the VWAP, but this study is actually a custom study that I sort of coded, so to speak, in Sierra. And so it's not just something you can add to any chart. You really have to use this chart and then add your other stuff to it. It's a little bit complicated otherwise. But if you want a copy of it, Wayne and anyone else, let me know and I'll send it to you. Okay. So this is kind of centered. This all is related to the idea that in a volatile market, patience is extremely important, and you need to be looking for numerical measures of how to how to force yourself to be patient. And one way to do that is to use something like this, where these lines are directly related to the range of the day. And if we have a super wide range, the lines are going to be super wide, but they should be wide, because if you're trying to trade a market like this with a 10-tick stop, this is not going to work. You really need to give it a chance to breathe, and one way to do that is to wait. And that's not very exciting, and it's not a lot of fun, and there might not be as many opportunities. But how else are you going to trade, a market like this with a retail size trading account? It's very difficult. So anybody who wants a copy again of the study, just email it to me and I'll send you the charts. Ron's saying VWAP is in the studies. That's true. The volume weighted average price study is in the studies. It's just called volume weighted average price. But the math that is creating these other lines is something that I made myself, and it's not part of the VWAP study. It's something separate. So if you want copies of it, certainly I can offer it to you. Okay, there's no fee or anything. Okay, so I think that this is something that people should seriously consider. It doesn't necessarily mean you have to do away with everything, but when you're seeing your indicators just get sliced through like they weren't even there, you have to kind of step back and be like, okay, well, what's another way to look at this that incorporates the ranges? Because if you're looking at like a moving average or something that's incorporating lots of history, depending if we had a big day yesterday or a slow day yesterday, that's going to make your indicator look and feel a certain way, but it's just getting ripped through. And that's why I find this particularly interesting. Okay. Anybody wants a copy of this? Again, don't ask me here in the chat box because I'm not gonna remember everybody. So just email me or your representative in the office, and we'll make sure to get copies to you. Okay. All right. You can start it at the London Open, Dan. You don't have to. I mean, mine starts at 5 p.m. Central Time. So when I right-click on my chart and go to chart settings, my start time almost all the time is 1700 and my end time is 1600. So my charts start at 5 and they close the next day at 4. So it's the full 23 hours. You would want to adjust this for your time zone. So if you're in East Coast, this would be like 1800 to 1700. Okay. All right. And again, I know that's not directly related to the profile stuff, but this all goes hand in hand because, again, when people are looking at charts on slightly longer time frames and they're looking at these levels that are oftentimes pretty far apart, they tend to see exhaustion a little bit better. If you're looking at a 133 tick chart, you're not seeing, the market petering out. You're just, it's like a pinball machine. And it's very difficult to trade that even when the market is not super volatile. When it's super volatile like this, forget it. I just think it's very, very hard. I mean, you might be really in tune one day and you're calling these little tops and bottoms and everything's working great, but I just don't think that's something that most people can sustain very often. Okay. All right. So just going on to with the MPD thing, I want to show two more charts that are kind of related, and then I'll show you a couple examples about the profile stuff as well. It's also important to remember that you don't have to do away with your profile charts to, with your regular charts to also incorporate elements of market profile into your charting. So on the left here, we've got that same MPD chart, okay, the maximum permissible deviation, up and bottom, and the 0.5 levels. What I also did was I added another study that's called the TPO value area lines. Okay, so the TPO value area lines are kind of like the TPO profile, except all they are the value area lines portion instead of the full profile. So if you don't really care about that bell curve like thing we saw on the other screen, you just want to know if the market is above the value area high, in the value area, or below the value area low, then you can add the study called TPO value area lines to any chart, and you can get these three, I would argue very important areas added to any chart. So the value area high up here, the value area low here, the point of control here. And so what this is basically doing is, like, the reason why people do this a lot is that people who are short term, let's say you're taking trades that are short, you see a short signal come up. A lot of people that we know or talk to that follow market profile will not go short if the market is above the value area high. They just won't. It's not because there aren't times where the market goes above the value area high and then comes back below it. Certainly that will happen and does happen and will happen again. But as a method of trying to filter out counter trend signals that are too strong in the other direction, a lot of times people will simply not go short the market if it's above the value area high. Conversely, for the value area low, there are traders that we talk to and engage with that will not take long positions if the market is below the value area low. They will just not do it. All right, and so it's not a be all end all. It's just it's something you can put into your list of characteristics that you're looking for of the market to try to filter out some of the bad stuff. All right, it's just another filter. The point of control, in this kind of market, I don't think the point of control is all that important. But a lot of times, profile traders are looking for the market in a choppy market, to hover around the point of control. In a market like this, obviously, it kind of feels like all bets are off, and that's pretty much true. But in a market that is more normal, where there's like a reasonable range, and the market is set of gyrating in that range, a lot of times that TPO profile chart is something the point of control is something that people will look at. All right. On the right-hand side, this is the same exact thing, except the value area lines are based on volume, not time. So volume value area high as opposed to the TPO or time-based value area high. Volume value area high, volume point of control, volume value area low. Okay, same general idea. The point of the exercise is to show that you can incorporate aspects of profile into your charts without them taking over your charts altogether. Although in many cases you could argue you might be better off. All right, you could answer that honestly to yourself. All right, but the volume value area high, volume point of control, volume value area low on a regular chart. Okay, it's just a different study. If you right click, go to studies, okay, and you just look for volume value area lines. Okay, Jack asks, what is the name of the chart book with the VWAP? It's right here. But it's not on your computer, Jack. It's only here. So if you want a copy of it, just contact your rep in our office. We'll get it to you. Okay. All right. Bob asks, do I use the developing lines as opposed to okay, that's a good question. So what Bob is asking is, why are these TPO value area high and low moving around? Okay, what most people do is they just display the current value, and the default setting in the study just projects a line backward, kind of like a resistance line, like this, at whatever the current value is. I like to look at the developing line because I like to see where the value area line was at the time when I'm looking back in history to try to do analysis. So in other words, folks, if you go to the TPO value area lines and you look at this draw developing value area, this will default to no. And if I change this to no, watch what's going to happen is this line is just going to become a flat line going backwards, okay, like that. So what this is basically saying is this is where it is now, and that's the end of the story. But the problem with this is that if you look back in time, like let's say you're looking at this tall green candle or these tall green candles right here. To me, when I'm going back and looking and saying, all right, where was the value area high at that time? This does not tell me that. This only tells me where it is right now. If I change this to draw developing and a yes, I can see that the value area line was here. Not that in this case it makes that much of a difference, but in some cases it does. So when I'm going back and looking at things, I like to use the developing lines because I like to see where the line was in relation to the market at that time, not just where it is now. All right. Yeah, and Wayne says too, so some people will color the background of the chart when the market is above the value area high or below the value area low or something. And it's like, okay, if we're above the value area high, the background is green, and if I see green, I don't go short, period. I just don't go short. Fine, like there's nothing, I don't think there's anything wrong with that. I think that you're probably going to filter, you're going to miss some things. You're going to miss those magic retracements where everybody wishes they could sell the overvalued market and then it collapses. Yeah, you might miss that, but you might filter out a lot of bad, trades that you have this need to take because it looks like the move is extended. So you want to sell it, but really you're just selling into this massive uptrend that is just beginning, and then you get your head ripped off. Okay. Can you draw the developing lines with the volume by price histogram? I mean, you can add the volume value area line study, Tomas, onto any chart that has a volume profile on it. So you certainly could do that. The reason why that works with the volume profile is because the volume profile still advances based on time, so you can add any indicator to it. The TPO profile doesn't advance based on time in the same way because of those 30-minute blocks. You can't really add studies to it. But with the volume profile, you certainly can add the developing lines. Sure. Yeah, definitely. All right. Okay. Let's just do a couple of quick mechanics. I was actually messing with this chart a little earlier today, just screwing around a little bit. And I just want to show you very briefly how you can, get from that initial profile setup to something that looks a little bit more like what you would expect to see. Okay, so let's just do some quick mechanics and then we're going to probably wrap it up. Okay, so we'll start with this profile chart with nothing on it, just like this. So this is what the TPO profile chart looks like when you add it with nothing on it. Okay, and again, I mentioned that there are a ton of yes or no inputs and all kinds of things you can change. We're going to change a few of them. We're not going to change all of them, but I'll show you the ones that I feel are most important. All right. So, and again, this is recorded. So if you want to come back and watch this and go back in slow motion, you can do that too. If we go to settings, the very first thing that you'll notice is the letter block and price increment in ticks. What this basically means is that every row is 2 ticks. That's a default setting. Why isn't it 1 tick, Patrick? Well, it's not 1 tick because oftentimes it makes the profile so tall, especially if you have a big wide range day, that you can't even read anything. So what you'll see that is this is normally set to 2. I am actually going to change it to 1 in a second here so you can see the difference. But if you just go to, put a 1 here and push apply, this is hard to tell because we're not that zoomed in. So I'm just going to leave it to 2 for now. We're going to come back to that one. The other ones here, I normally leave these the way they are. The only other thing that I change at the very beginning is there is an option for how to display the style, and you'll see that it defaults to blocks. So the first thing I'm going to do is change that to letters. Okay, so that's how we get that ABCD look. Okay, so just change to letters, and you'll see in the background something has changed. Okay, now if I zoom in like this, this is going to start to become legible. Right now it's really hard to see because we have huge ranges and we're trying to fit a lot of data onto the screen. Okay, so if I'm just going to expand this, you're going to start to see that it becomes something we can see. All right, but this is really not usable just yet. So in the settings section, there's a couple more things that we would want to do. One thing is that I usually do I do extend the value area. Okay, so this is the value area high. See where the gray meets the green. Okay, extend value area until the end of the period. So that means when there's a new period, this line extension that we're going to see in a second is going to stop. All right, so there's the value area extension. So you can see the value area high here and the value area low right here. Okay, and extend the point of control. That's set to none by default. If I change this to end of period, okay, you're going to see that that's this point of control, the magenta line. I'm just going to push apply. It's going to extend the point of control as well. All right, we can adjust the colors and the labels and all that stuff here in just a little bit. All right, the next thing is the font. So the font size defaults to 10. If you change it to 0, what it does is it automatically scales based on how zoomed in or out you are, like this. Okay, this is a situation where the number of ticks per row becomes relevant because we have a range in the S&P all the way up from 26, 48, 50 or so where the high was down to 25, 83. So we've got an enormous range, like 67, 70 points, right? Obviously, we don't normally see ranges like this in the S&P, so it's a little easier to fit more data on the screen. But if you are okay with making the profile a little less granular and still get the general feel of what's going on, you can increase this number. So if you increase the number, that means the chart is being forced to draw less rows, and you'll see that the font gets a little bit bigger and it's a little easier to see. So in this case, I've changed the letter/block price increment to 4 from 2, which is the default. If you have a really tall monitor, one of those taller monitors than it is wide, and you want to put your profile chart over there, you could make this a 1, and you probably fit everything you want on there. But it really is a function of actual screen size and computer resolution and that sort of thing. Okay, and then a couple other things that sometimes people will do is go to the subgraphs, and this is where you can control the colors. Now, I don't really mess with all of the colors in here. I usually just mess with a few of them. So the one that jumps out at me the most is the actual letter colors for the TPOs, or that's called time price opportunities, TPOs. I'll usually make that a color that is legible, all right, or easy to see on a white background. So like this blue color. Okay, so there's the TPO color. And then here is the point of control, the point of control color is this magenta line, which I'll keep. That's fine. The value area color is this gray color. So this is the value area that where the market has spent 70% of its time basically. And I'm just going to make that a little easier to see. So I'll just make this darker and push apply. You can see we're going to get an immediate response right there. And then the only other things are going to be these extension lines for the initial balance, which are these two red and green lines. And then also the point of control, the value area extensions and the point of control extension. And so right here, you can see point of control extension line. All right, I'm just going to make that the same magenta as the point of control itself. And then if you want to have a label over here, like you saw in some of my other charts, you can check this name label. I'm going to check value and name label. And then I'm just going to call this TPO POC. So if you put your own short name for the line in here and then put this name label on, then it'll put whatever you put in here as the label on the y-axis. All right, and then you have the value area extension lines. Same thing here. I'll just do VA for those. So it's going to label both of them. All right, and then for the initial balance extensions, you could label those if you want. I'll just leave them unlabeled for now, but same idea. So if I push apply here, we're going to get that behavior. So here's the value area low, value area high, TPO point of control. And with just those few changes, you now have a relatively professional looking TPO profile chart that has the data that most TPO profile traders are using. And again, this is not something that you have to replace everything else that you're using, but if you want to look things on a little bit of a bigger picture or see where the market is relative to where it has spent the majority of the time in the session, then this is something that is useful. Now, one thing that is especially useful or important when you're looking at charts that are based on time here is think about this. Let's say the market opened last night and it sat at the same price for 6 straight hours. Okay, just sat there and didn't do anything. Was that price really important, or was the market just dead in the water? All right, in that example, you could argue that the market was just dead in the water. So if you are going to use a TPO profile chart, it is a little bit more important to make a consideration or consider using split sessions for the day and the evening. Because what can happen with a TPO profile chart like this one is if the market just sat at 26.16 for 6 hours last night, which it didn't, but if it did, then it could artificially inflate the importance of this value. Now you might say, well, maybe it really was important. Maybe everybody saw that the market wasn't moving around, and therefore, they thought that was an important price level, and no one wanted to do anything. Well, maybe that's true, but I would generally argue that if you're going to use a time price opportunity or a traditional market profile chart, that you make a consideration of splitting the sessions. So here's how you split the sessions. So first thing you want to do is right-click and go to Chart Settings. All right, this is different than most other studies because most other studies have all of their settings included in the study section, like a moving average or a MACD. With this, you actually have to change the structure of the chart a little bit. And that is going to involve this start and end time in this evening session thing here. So if you would like to have split sessions, first thing you need to do is check use evening session, and you need to define your day and evening session. So if I want to do the first session here is my daytime, I would do, let's say, 0830, okay, until 15:59 and 59 seconds. So 3:59 and 59 seconds. So we're not in the 4 o'clock period, okay? It's ending right at 15:59 and 59. So 1 second before the New York stock market session closes. And then for the evening session, I would do 16, which is that following hour, though no trading will happen, so no periods will be built. And then end it at 08:29 and 59 seconds. So this is my full day session, New York stock market hours, and then I have use evening session checked, and then I've got an evening start and an evening end. So if we apply that, nothing will actually change until we ask the study to consider that we've done this. And the way to do that is in the study section, there is one study one option that's sort of buried in here that says new period at day session start when using evening session. Okay, and what this is basically defaulting to is no, but when we say yes, what this study does is it then looks at that day and evening session setup we just did in the chart settings, and it applies this property. So when I push apply here, you're going to see that it's actually going to separate the profiles out for the day and the evening. So you can see what's happened here is that this is the evening session for last night. Now this is obviously Sunday night, so it's a little bit, it's Sunday night, not like a Tuesday evening or a Wednesday evening. But this is the daytime profile for today, starting at 8:30. All right, and this is the profile for the prior session. Mandeep had a question in here. Can you take a TPO chart and expand it so each half hour is displayed as a separate column? When you right click on a TPO profile chart, you get a different menu. And one of those options is letters/blocks and own column. Sometimes people prefer this. So if you go to letters/blocks and own column, okay, it'll give you this behavior. So some people who are used to looking at candlestick charts prefer to look at TPO profile charts this way because they sort of look like a candlestick chart, or they've got a couple reasons for wanting to do it this way. You do have the ability to separate each one into its own column, or you can do it for every profile on the screen. All right, if you want to reset it, if you've done something like that, you could just right click and push reset TPO chart. All right, also very quickly, you can merge a profile with a prior profile or whatever, or more. So one way to do that, the easiest way is you just right click and say merge with prior profile. And what it does is it squishes together today and last night into one profile. Okay, beginning in the evening yesterday. And beginning at 1600, which is when my evening session started. If you want to undo what you just did, you just right click and say undo all merges in this profile, and then it just splits them back up. All right, so basically when you have a profile chart up and you right click on it, you get some different choices than you would normally get from a regular right click interface. Okay. All right. Sean says, if you could go back, could you build weekly or monthly profiles, going back like 8 or 9 months? You definitely can do that. So if we were to, this might take a second to load some data here, but if you want to go back and get a lot of historical data for like a really big profile, you have to load a lot of candles, and if you do it on a really short time frame, the program can hang a little bit if you're really pushing hard on it. But there's a couple of ways you could do it. If you on a daily chart, okay. So if you go to a daily chart, so now we have a daily chart. The main thing is if you're going back to prior expirations, you're going to want to make the chart continuous. Okay, so a continuous contract, I usually use this first date rule rollover option. Okay, so then we're loading, a bunch of historical data. When you go to a daily chart, you get this, by default it'll load like 1,000 or 2,000 days or something like that. So you want to make sure that this days to load option is big enough. And then let's just add this by default and see what we got. Okay, now, so what it's doing, it's basically resetting to, my prior settings. So what you're going to want to do, Sean, in this case is you're actually going to be controlling the way the study is being built from these menus here, not from that chart settings window. So that stuff all has to be there as well. But let's just see if we can bump this up a little bit. Okay. Excuse me. Okay, so this would be monthly profile based on fixed time. Yeah, see, this is going to take a little while to load, but it is possible to do this. It's one of these studies that is controlled from inside the study itself, not as much from the chart settings window. So this might actually take a little while to load, and I'm not even sure if it will load on my computer. But there's also the ability, Sean, to build what's called a cumulative TPO profile. There is a playlist on our YouTube channel. I think you may get a kick out of it. I'll actually post the link to you here. And actually, I'll post it to everybody. Hold on. This is a little playlist that we put together that focuses on the profile. And one of the things I'd like, and anyone who's interested in building like a big profile that starts with X date, is check this video out that says building a composite market profile or TPO profile. Okay, that's going to give you what you're looking for. I think that this is probably going to hang my machine up because, again, this is like a really basic computer and we're loading a ton of data. All right. So I'll probably defer to that video because I think that's going to do what you want, Sean. But if it doesn't, then let me know and we'll clarify. Okay. All right. All right, folks. Well, I think that's probably where we will leave it for now. I went a little over my time here, but hopefully y'all got something out of it. I mean, obviously this is it's a different way of looking at things than what most people are used to, but there are elements of this type of trading that I think could be useful to someone who finds themselves sort of getting chopped up, especially in a volatile environment. But just be patient and look for trading strategies that require you to wait. Okay, if the strategy does not require you to wait for a while, it might be too quick or too fast, or it might not be taking into account the current volatility situation. Okay, we don't want people taking 30, 40 trades a day and getting chopped up like that. We'd rather see people take a few trades a day, depending on the situation, across a couple of different markets with reasonable risk, reasonably wide stop that at least gives them a chance to stick with it, than to chop themselves up over a week or 2 weeks and be gone. All right, nobody wins really that way. That's not what we want. So I think that this is a challenge for everybody right now to try to incorporate elements of daily ranges into the strategy. And if you feel like the daily ranges or some measure of daily range, like what we see here with the MPD, is not being breached, or it's not close enough to being breached, then maybe you consider standing aside until it does. Okay, again, it might cause you to wait around a lot, but maybe it'll work out better for you in the long run. All right, Arthur, let's talk about that. Maybe off the clock. Okay. All right. All right, everybody. Well, I think that's probably where we will leave it. I appreciate that. I'll make a note of all the questions here. There were a couple that I know I'll follow up on. So make sure you register at Charting Club at chartingclub.com. And again, if you have groups of traders, or if you feel like there's a small group that you're working with that might benefit from working with a firm like Infinity, of course, we would really appreciate the referral. That's how firms like Infinity grow. A lot of word of mouth and online trading buddies, small groups, rooms of people. That's the way that our firm grows, and that's the way that we can spend more time doing these sorts of events and creating content than trying to get people in the door, so to speak. Okay, so we really appreciate the referrals. It means a lot to us, and please continue to refer your trading buddies and friends. We very much appreciate it. All right, good deal, everybody. Thank you. I'm going to read some risk stuff here, and then we'll close the room down. We'll have this on YouTube and in Charting Club within probably a day or so, and hopefully you got something out of it. All right. Okay, thanks everybody. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Alrighty, everybody. Thank you.